Good morning, everybody. This is Mark. We're back here for the morning call. It is Friday. Good that you can get no news on Friday. Just kidding. Closer to the fiscal cliff, possibly. Futures are down big. Boehner couldn't get his own plan, passed in his house. We're down. Obviously, this headline risk has been in the cards for a while. It's really been shrugging it off. Today, the shrug is not off. And we're down a chunk, and we'll have to see how this market reacts. Now, we are all on, I think there's still a bit underneath this market. Today is going to be that test. Do people bail before the end of the year? Or, quite frankly, we're basically just about where we were, a week ago, at least on the spiders and on the Qs. The key is, are new buyers going to come back in, or are they just going to abandon the market till the end of the year or until some resolution? We'll have to wait and see. I personally think at some point you're going to have some viable opportunities, but it's good that a lot of us have reduced risk across the board and understanding that these guys cannot get their act together. It is what it is at this point in time. So spider-wise, we are now below the 21-day moving average. You have about 142.85. The next significant level, 142.50, 142.26 on the spiders. I think that's a pretty key level for us to look at. Obviously 141.75 is the next level. The Qs, you'd like to see it hold 64.62, which again is the 200-day. We're still above there a little bit, but we'll have to wait and see what happens. Stock-wise, chart-wise, if I'm going to be buying something, normal rule of thumb is I'm going to be trying to buy the strongest industry on the pullback, knowing that it's news-related, not trend-related. And that would be the banks. Will I just step in front of Goldman at 126.80? Not so sure yet. It could. I said 125 would be my level. It's now 127. We'll have to wait and see what happens. But that's how I'm looking at this tape. I think it's going to create opportunity today. I don't know if volume is going to continue to stay lethargic. We'll have to wait and see if that changes. But I'm still looking at the best in breed. New shorts, I'm not putting new shorts on. We've, from a trading perspective and a technical perspective, some of the stuff I'm looking at, I'm not going to jump into new shorts, with a down open. Normal rule of thumb with a down open is I wait for the first 30 minutes of the day, see what happens, and then we decide which direction, this market really wants to go. We could be bear flagging in that process and then go lower, or obviously you could try to begin to fill that gap. With no news, headline news related, and no change in the fiscal cliff talks, you're probably not going to fill that gap anytime soon, intraday at least. But it's good to know that we're still in that trend, and today's going to be an interesting day overall. I'm not going to be, I'll put up the apples. I'm not really going to be focusing on Apple. I think Apple, from more of a short side, it's been a bearish pattern that has tried a few times to regain, whether it's 8-day moving average or 10-day moving average, and has really failed just about every single time. It's down about $10. Seems like it's just languishing at the lower third of its trading range to eventually move lower. It's not my play to short at 500. If we're moved down to 480, maybe I would from a cash flow point of view. It doesn't seem like it has it in it. I thought year end it was going to have some support, and I was looking at 550 before 500, but I don't know if that's in the cards. We'll have to wait and see. For me, I've been avoiding it the last few days because I am confused with it. I don't have big opinions. I don't have big conviction on it. And that's what you can do as a trader. You get to avoid stocks or ideas when you don't have conviction to back it up. And that's quite frankly where I'm at with Apple. 500, see if it holds, 505, the previous level, and we'll go from there. Google, still a decent looking pattern. What is it down this morning? I didn't get the chance to look. 714, 715. 710 was the level I was looking to buy the first time around, down at the 705, I guess. So we'll have to see. We'll see if it can actually hold the 8-day moving average, which is around 711. That's where I'm looking. 8-day moving average, 21-day moving average. Same thing with Amazon. 256 yesterday was a good buy. We were talking about it. Got to 256.50 maybe. Good trade. I think guys took a lot of the stuff out of the trade. Right back to 257. Is it buyable again? We'll see. It seems like, with this down open, probably at some point, but understand it could just be back and fill. And for a few days, Amazon could do this like it did that, base over a 10-day, 10, 12-day period. I wouldn't be surprised to see that, 256, 262 range. Make sure you don't get caught too much in the middle. Commodities, gold, liquidation is just happening. I actually didn't take a look this morning. Where is it at this morning? Just so I can see it. Not really doing much this morning. You know, it could be that big funds are getting liquidated, i.e. Paulson. It is below the 200-day. Nothing great, in my opinion. You know, from a long-term point of view, is this where people take dips? Maybe. But technically, it's a broken stock, and I'm staying away from the gold, and I'm staying away from silver. You know, from a longer-term perspective, you know, if it gives me an intraday cash flow trade, that's in the cards. We'll have to wait and see. Home builders, I know it's an industry that we like to play, and really has shown some good resilience. Hanging in there, not a whole lot to talk about. Lens at the top third of its trading range. Obviously, it's going to be down today. Rylan, Toll. You know, again, talk about leadership. Leadership really is, you could say the home builders, but really the banks right now. So, you know, this is an industry I do look to get involved with on pullbacks because it's been such a strong industry. But at the same token, I got to wait the first 30 minutes. That's the normal rule of thumb to see what happens. I think it's a cash flow day across the board. In just about everything. You know, I'm not leaning that we're gonna jump over the cliff. I'm not leaning that they're gonna resolve everything before the new year. Who knows? You got to trade it accordingly. If there's resolution, we'll get right back to where we were yesterday, and probably above that in the tape before year end. If there is some resolution, if there is not, we're gonna languish around here, and then probably in the beginning part of the year, you know, you'll get a little whoosh, and at some point, we're going to obviously have that resolution. It's just a matter of timing. But that's the key to trading. It's a matter of timing. So leadership, banks, high beta, certainly can watch. But at the same time, I don't really have a whole lot of price points that I'm leaning on. You know, you can always, I go back to my leadership, the eBays of the world, Expedia. Certainly Apple was the leader. I think Amazon, Google has sort of taken the torch, at least temporarily, in that department. Priceline hanging, but you know, I'm assuming today it's going to be down a chunk. I can't really tell, 623 or whatnot. So, you know, you want to find good-looking charts and good-looking setups. And even on the retail front, you had Coors regain some of its composure. I believe regained its secondary. It looks good technically. It's not down $2 today, so maybe that's a buyable opportunity. Same thing with Lulu. You know, you're having good-looking charts on pullbacks because it's news-related. It's something interesting. And obviously, from an earnings front, you had Nike that is actually up $3, which, again, I was actually hoping that was going to be down, and that would have been buyable, knowing the fact that it's only down. It's not down on it was up on earnings, and it's down because of the market conditions. But it's already up $2. Something to certainly keep on the radar. RIM. Something to keep on the radar. It is 12.24. So from a technical point of view, obviously they missed earnings. We've been talking about this for a while, a run into earnings, and then possibly, you know, it was a sell the news, and it was, and that's what it seems like it is at. Now $12, that's the level it was a week and a half ago. We were talking about a move to $14.50. Is it buyable? Maybe not the first time around. Price, probably, meaning, you know, if it hovers here for a little bit, that's probably the level that you could probably get back involved in RIM, knowing, you know, it's taken a nice 7% discount, 8% discount today. But we'll have to wait and see. So I wouldn't be shorting RIM at $12 at this point in time and thinking it's going to go back to 8. I don't think that's in the cards, at least not in a time frame I'm looking at. So if anything, I want to see 12, 11.50 hold some support for a buyable opportunity, but that might not come today. And that's where we're at. So, you know, we definitely have some selective plays to look at on an earnings front, but overall, it's going to be a tricky tape. Hopefully, you know, they bail out some of these, you know, give you some trading opportunities, not necessarily bail out because I don't think anybody was really net huge long. Even though you see, you know, me, I have I'm spread out in a bunch of positions. I'm less than tier 1 in probably 90% of them. So for me, I just have a lot of feelers on that might stay on the board or might get off. It just depends on how the first 30 minutes and longer goes. I don't think anything's changed, except the fact the headlines are getting a little bit more, you know, vicious, that we're getting over this cliff. That's where we're at. We knew we've been headline, you know, related and headline, at risk for a long period of time. We'll have to see if this is going to be a buy opportunity. I will be on the VTF in the AM. Good luck today, and I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.